Judy was boring.
Hello.
Then Judy discovered ChumbaCasino.com.
It's my little escape.
Now Judy's the life of the party.
Oh, baby, mama's bringing home the bacon.
Whoa, take it easy, Judy. The Chumba life is for everybody. So go to ChumbaCasino.com and play over 100 casino-style games. Join today and play for free for your chance to redeem some serious prizes. ChumbaCasino.com. No purchase necessary. Void where prohibited by law. 18 plus terms and conditions apply. See website for details.
Lucky Land Casino, asking people, what's the weirdest place you've gotten lucky?
Lucky? In line at the deli, I guess?
Aha, in my dentist's office. More than once, actually.
Do I have to say?
Yes, you do.
In the car before my kids' PTA meeting.
Really?
Yes.
Excuse me, what's the weirdest place you've gotten lucky?
I never win and tell.
Well, there you have it. You can get lucky anywhere, playing at LuckyLandSlots.com. Play for free right now. Are you feeling lucky? No purchase necessary. Void where prohibited by law. 18 plus. Terms and conditions apply. See website for details.
Hey, it's your financial maven, Samantha Besnoff, CPA. And after almost 25 years in the accounting world, I've decided to share my insights and passion about money. Knowing your money and hopefully feeling less stress about your money is what I call being financially empowered. Welcome to the Your Financial Maven podcast. Welcome back to Your Financial Maven. I'm so excited to be back. I had a short hiatus, and now I'm back to do more. I have some exciting interviews coming up, as well as Do You Know Your Money Minisodes. Basically, those minisodes will just talk about different things like budgeting and planning and taxes for both individuals and also for small businesses. I'll have a whole small business series as well. But I'm just glad to be back here, glad to be talking to you, and excited because not only have I changed up my podcast a bit, but I am now on Spreaker Prime Network. I am so thankful to iHeart and Seneca Women for all that they've done for me with the first set of episodes that I did. It was an exciting, exciting time, and it really gave me kind of that push to become more of an independent podcaster. So I'm so excited and thankful for that opportunity, and I'm excited to be at Spreaker and to be on their Prime Network and to really be on my own. I am going to just jump right in. I think it's important because we need to talk about understanding your money. You know, I spent a lot of my prior episodes talking about and knowing your money, and I've done a little bit more research with all of that. I mean, I've been in the accounting field for 25 plus years, but that doesn't mean I stopped learning. And one of the things I actually do is I go onto a couple of local college campuses and I do some workshops. Some on tax, some on a combination of budgeting and tax. And in that process, I decided maybe I should write a book about do you know your money and understanding the things when it comes to taxes and accounting. And in that process, I kind of reformulated some of my thoughts and things when I had talked about in some prior episodes about the difference between a budget and a spending plan. And I think there are some very clear differences between the two. But I think overall, both having a budget and or having also a spending plan is part of your tools for you to understand your money. I mean, that's the thing. I talk about how money is a tool. It definitely is a tool. It's a resource. But how we understand that tool and resource actually leads to having a few more tools. So I'm going to talk about what I feel really explains or what is a budget and why I think it's important that you should learn to budget your money first before you jump into a spending plan. Now, a spending plan can be anything from I've seen the envelope money, I've seen the needs, wants, save method based off of percentages. Typically, those percentages are 50, 30, 20. And I just think it's important to really understand the differences. And here's the other thing with that is having a budget and or having a spending plan, because you can have both. You can use a budget and then you can take up the understanding of your money to the next level and kind of convert it or use it into a spending plan. But besides that, being able to determine what are you actually spending compared to what your goals are or the budgeted numbers or where you think your spending plan should be is something called cash flow. Now, in the accounting world, cash flow, especially for businesses, have a variety of different things that kind of play into it. But basically, the basics about the cash flow is understanding the money that you have, understanding the money that you're spending and what's left over to make sure that you have enough cash or money in the bank to be able to pay for your bills. So I'm going to give you an example of the cash flow first, then I'm going to go into budgeting, and then I'm going to talk a little bit about the spending plan. Okay, so let's talk about a cash flow first. And the best way that I can talk about cash flow is to give you an example. Every month, I sit down pretty much towards the end of the month to look at the next month to see what bills are due and how much of those bills are due. And what I do is I say, okay, I know from an income standpoint that I'm going to have my husband's W-2 income coming in and some of my client income coming in. So I pretty much have a good idea of what's coming in for income. I don't always. Sometimes, hey, you can get a little bonus, or I might take on a new client. But what I do is break it up. I do the first 15 of the month and the last half of the month because my husband gets paid twice a month. But you can do this cash flow for the entire month if you know what you're bringing in. You can do it weekly. You can do it whenever you get paid, things like that. And basically what I do is I say, okay, so for the first 15th of the month, my husband brings an X. And I take that and I say, okay, what are my bills that are due between the 1st and the 15th of the month? I already know that I kind of carried over some money from the prior month in the bank, your ending bank balance. And I add to that the income that my husband and I bring in, and I subtract from that all of the bills and the expenses that we may have. And then if there's money left over, that gets carried to the rest of the month, adding to the next half of the monthly payments or the income that comes in. And I compare the next half of the month with the bills and the expenses that we have. And then at the end of the month, hopefully there's still money left over. I haven't overspent. I haven't overdrawn. And that bucket of money that's kind of left there, I look at it and I go, okay, I can put some away for savings because I know that I'm not necessarily going to need all of that balance that's left in the bank at the end of the month. And I can carry the rest of it, if I want, forward to the next month. So really, a cash flow is just what is your money coming in? What is your money going out? And what are you left over with? Can you put some away for savings? And I always say, yes, put something away. Even if it's $1, put something away. And then I can carry the rest of it over to the next month. So the difference between that and a budget is you're looking at your entire year. Now, you can break it off month by month, but you want to start with your entire year. And you want to see and look at all of your income and all of your expenses. Okay, so yes, you have credit card bills, but see, the thing is, those credit card bills are made up of all these different things you bought, and those are all of your different expenses. So when you're sitting down to look at all of your expenses, you should look at all of your expenses, even the ones that you pay on the credit card. And what you can do is say is, okay, if you know for the coming year that you're going to bring in, let's say, $50,000, you just know off the bat that total is $50,000. And, people will say, well, is that gross? Is that net? So what I suggest is you go off of what your paycheck income is, which is your net number, not your gross number, because your net already has taxes coming out, maybe health insurance coming out, maybe retirement coming out. So take your net number. So let's just say you start with $50,000 for income. So your budget for income is $50,000. Now you have to sit there and say, okay, well, what did I spend, let's say, on rent for all of last year? And if you spent $1,000 a month, that's $12,000 for the year. If you know that your rent's not going up and it's going to stay at $1,000, then you can say, okay, my rent expense is budgeted for $12,000. And you want to go through each of your expenses and kind of estimate and guess to a degree what you think you're going to spend for an entire year. And that's how you build your budget. You build your budget off of what you think you're going to spend or what you would like to spend. Let's say you have some goals that you want to reduce going out and you want to spend a little more on groceries. So it's important to kind of list out all of those expenses. And of course, the best way to do this, in my opinion, is through an Excel spreadsheet. They do have programs and apps out there that you can do your budgeting, but I am going to leave you a link to the spreadsheet that I like to provide and share so that you can really see what you do. So once you build your budget, and I would recommend, we're getting close to the end of the year, that you take some time, and it will take some time because it's important to do that initially. But I would take some time towards the end of the year and start building your budget for the next year, so for 2024. And I understand there can be stress involved with this, but if you can build your budget and start using your budget, I think the stress about and around your money is definitely going to be reduced, and you're going to feel so much more empowered, so much more financially empowered. So you build this budget, you have all of your expenses that you kind of know what you're going to spend on, and you have a general idea. Now, I will tell you this, a budget is not set in stone. So if you make an estimated guess, let's say on gasoline for the car, going and filling your car up. Yes, it fluctuates. We know that. But come up with some number that, maybe I'll spend $1,500 a year on gasoline for the car. And it can change, and that's okay. You can adjust your budget as you get into the year and realize I'm spending more or I'm spending less, and I kind of have to adjust that. But my caveat with that is don't go changing your budget all of the time and on a whim. Try to really stick to the budget that you set up, but make those adjustments as necessary that make sense to help you with your goals. Now, what you'll do then is you've built this budget. Great, that's step one. Step two is on a monthly basis. So take your annual budget, divide it by 12, and now you've got each month of where you think you should be. I know some of your utilities are going to be quarterly, some of them are going to be semi-annually, some of them are going to be monthly. I would say the easiest thing to do is just do it monthly, because you could put away money for those utilities that come on a quarterly basis. Every month, you could put them into your savings and have them designated for the utilities. So when you have to go pay those utilities, you already have the money. You just transfer it back into your checking account, and you don't need to worry about that. Plus, you get a little bit of interest on that money, so it's not a bad deal. But what you're going to do on a monthly basis is you're going to actually mark down what you actually spend every time you have an expense. And you're going to compare that to your budget and give you an idea then on a monthly basis, am I going over budget? And how you know that is it'll show you as a negative number when you take your actual, subtract it from your budgeted number. And if it becomes a negative, that means you've overspent. You spent more than what you wanted to budget for. If you take that number and it's smaller than what your budgeted amount, great. That means you're going to have a little extra left over, and that's not a bad thing. So that's really kind of where the budget comes into place. It's a tool to say, what am I actually spending on, and comparing it to what I want to give myself as a goal, as a guide. So that's kind of where I feel you should start with a budget. But then you can do a spending plan once you get a better understanding of your money. And I really feel that doing a budget will give you a better understanding, and also doing some cash flow, kind of seeing from month to month, what kind of cash do I have to physically pay my bills on a month-to-month basis. When you feel comfortable with that, you can move to a spending plan. And what you do with the spending plan is slightly different than a budget. You're still going to compare what you actually spent in your categories, but what you're doing is you're giving yourself more of a plan. You're saying, okay, so I'm going to use the 50, 30, 20% needs, wants, save method. And basically, you're going to take your annual income. So let's just say it's $50,000. And you're going to say 50% of that is going to go to all my needs, utilities, groceries, rent, anything that you determine are needs. Okay, so $25,000 of my annual income is going to go to my needs. And then you're going to take 30% of that $50,000 and say, these are my wants. I want to be able to go out twice a week. I want to go on a trip. I want to go to Starbucks 4 days a week. The wants are those expenses that are not necessities. So you have the 30% of that. Then you take your $50,000 and you multiply it by 20%, and that is supposed to be what you're saving. However you determine to save, whether that is in a savings account, a money market, investments, retirement, life insurance, that 20% of your overall income is supposed to go to savings. Now, as I've said before, if you cannot put that much away for savings, put something away. You can adjust that percentage to put something away, but your percentage should always add up to 100%, however you do those percentages. But the beauty of the spending plan then is it gives you, and you can do this also on a monthly basis, it gives you a guide to kind of say, okay, I know that I'm only going to spend this amount of money this month on my needs. And how do I do that, and what can I do? So again, it's a little bit more complex, but it gives you a different way of thinking about how do I want to spend my money. And it kind of helps you with the cash flow, because then you can also see what is my money that's coming in, what is my money that's going out, and what do I physically have to work with in the bank to be able to pay those bills. So those are my little insights on budgeting and spending plan, a little bit about cash flow. I hope that you'll try it. It's a great time of the year to sit down and reassess where you are financially. Yes, there can be some stress in trying to figure it out and fill it out. But I think once you start using it, you will be better at it. And like I said, there are apps out there that talk about spending plan and budgeting, and they help you do it automatically. And those are great tools. But I really feel that before you can sit down and use those tools, because they do a lot of it automatically, you need to really understand. A lot of this stuff is how I view it, my opinion on it. There are different financial professionals that will tell you different things, and there's really nothing wrong with that. It's just I feel that if you get a good grip and handle on your money first, using some of those other tools will be great. So I'm so glad that you joined me today on my first Do You Know Your Money Minisodes. And I look forward to chatting with you soon. I've got some great tips and tricks coming up regarding individual taxes since tax season's around the corner, and some great things for small businesses before tax season starts, as well as a great interview with a friend of mine, Billy Zarillo, a certified financial planner who I have been a colleague of for the last several years, and I can't wait to share that interview with you. For now, this has been your Financial Maven. Hey, it's your Financial Maven, and I want to hear from you. Feel free to leave me your insights and money stories or questions that you may have about money. You can visit www.yourfinancialmavenpodcast.com and click on the I Want to Hear From You tab. I can't wait to hear what you have to say about money. The purpose of this podcast is to provide general information on the subjects discussed. It is for educational, informational, and entertainment purposes only. You should consult your CPA, accountant, or tax professional for all of your specific financial needs or situations. Your Financial Maven is hosted and produced by Samantha M. Besnoff, CPA, and Your Financial Maven, LLC. Editing is done by Kris Zarnoch of KMZen Creative. Music is written, composed, and performed by Daniel Shore.
Wells Fargo presents one of the surest ways to grow your money. A Wells Fargo CD account, where you can earn a 5.00% annual percentage yield on an 11-month term with a minimum opening deposit of $5,000. Visit a Wells Fargo branch or wellsfargo.com/CD rates to open a CD account and start growing your savings with us.
Wells Fargo Bank, N.A., member FDIC.
Wells Fargo presents one of the surest ways to grow your money. A Wells Fargo CD account, where you can earn a 5.00% annual percentage yield on an 11-month term with a minimum opening deposit of $5,000. Visit a Wells Fargo branch or wellsfargo.com/CD rates to open a CD account and start growing your savings with us.
Wells Fargo Bank, N.A., member FDIC.